Nvidia stock and Palantir stock. Are these stocks buys now, or are they a complete ripoff? This is a very popular subject, right? And a lot of people look at these two stocks, very exciting next several years in front of them, obviously in front of the whole AI movement. And people are looking at these and they're saying, wait a minute, trailing P 164, forward P 63, price to sales ratio 26. This is before the moves here today. Trailing P not any because they haven't been profitable in the past. Forward P 45, price to sales ratio 10, ripoff, overvalued, junk. That's what they say, okay? And you got to do a little bigger digging. Okay. And as somebody that when I first started in the stock market, 2008, 2009, I started as strictly a value investor, meaning essentially if it was over a 20 PE, don't talk to me. I don't want to even see it. I don't want to talk about it. All I want to say is that's overvalued. No, it's a ripoff. Okay. As I got more and more into the stock market over time, you start to learn more about growth stocks. You start to learn more about valuing growth stocks, how to project out numbers for companies, right? And I started down this rabbit hole really started in like 2011, 2012, after I'd been in the market several years, because I realized, oh my gosh, I'm missing so many opportunities in front of me, but because it's over a PE of over 20, I can't accept it. You got to do a little more digging, and that's what I'm going to put together for you guys here in this video, and we're going to look at this on a higher level and talk about where these companies are going with their revenues, and are these companies ripoffs or not, based upon what they're expected to do over this next couple of years in their long-term trajectories, okay? I hope you guys get a lot of value out of this video. I appreciate everybody joining me, 27,000 plus subscribers on the channel. A little bit of a different video, not a reaction here today. I figured I'd just throw this on this channel rather than throw it on the main channel. And I know there's a lot of people that want me to speak about a subject like this. Are these stock steals? Or are they ripoffs? That's what we're getting into. Appreciate everybody joining me as always, okay? So as we spoke about, just based upon the raw numbers there, it looks like these stocks are overvalued, right? I mean, the forward P of Nvidia is over 3x the market. The forward P of Palantir is over 2x the market, right? Do a little more digging here. Now, what Nvidia just reported changed everything forever. Not just in terms of Nvidia, but for every stock that is involved in the AI movement. Because what just happened is Nvidia just said AI is for real, but not by just saying it. They did it by their guidance and their numbers. And we got huge stuff happening here, okay? Analysts were expecting for this past quarter $6.5 billion of revenue, and Nvidia did 7.2. But here's where things changed forever. And this just changed everything in the market, the way you have to value many of these companies and everything, okay? Here's what happened. Analysts were expecting Nvidia to do $7 billion, a little over $7 billion of revenue next quarter, which was going to be 6% growth, okay? Nvidia just announced that they're expecting $11 billion, which is 60% growth year over year. When I say this is the most shocking earnings I've ever seen from a company in terms of their outlooking guidance, especially for a big company, I mean it. I've never seen a company analyst be at 6% growth and the company say we're going to do 60% growth. That just, anybody that had any doubts about is AI for real, is this not for real, just got thrown right out the window. Shocking guidance. I mean, we're talking about a 10x of what analysts were expecting versus what the company's going to come in at. Now, the next place your brain should go is, oh my gosh, the next quarter is going to be so massive that like the future quarters are going to be pretty huge as well. So which means this changes yearly numbers. This changes the fiscal year we're in, the next year as well, right? Which Nvidia is already in their fiscal year 2024. I understand we're in calendar year 2023 right now, but some companies are already into their fiscal year 2024. Nvidia is one of those companies. And in terms of this, right, Nvidia, $30 billion was the expectation from analysts as far as revenue for this year. The company's going to, I mean, it's not even in the conversation anymore. The biggest question is, does Nvidia do $35 billion in fiscal year 2024, $40 billion, $45 billion, or $50 billion? That's the biggest question. What number do they put up this year? 35, 40, 45, 50. That's the biggest question now at this point in time. This also massively changes next year's numbers. 37 was the expectation for next year. That's laughable now. I mean, now you got to be talking about 50, 60, 70 for next year based upon these sorts of growth rates. Because when it comes to a cycle of selling these sorts of chips, it's not usually just like we sell them for 1 year and then that's it. It's usually a multi-year cycle, okay? So in regards to Nvidia, everything changed on revenue, and that's going to ultimately change all these numbers, and we'll talk about that in just a moment, which is how you value a company, right, based upon earnings per share. Now, Palantir, so analysts have Palantir growing only 12% next quarter, right? Then they have them growing 17% the following quarter, 16% for the full year, 19%. Okay, let's just think about this a little logically here, okay? Alex Karp seems extremely confident suddenly over the past 6 months. Alex Karp just told us on the last conference call, or not just the last conference call, but the last press release, that interest in their new more AI-enabled product, right, is pretty much unprecedented, is what he said, right? Is without precedent, right? Which means like it's just overwhelming demand and interest in their product. So if I had those two things, but most importantly, I just got the most important data point I could possibly imagine. And what is that data point? Is Nvidia just guiding for 60% plus growth in the next quarter. That tells me that AI is not fake, this is real, and this is happening, and this is a massive opportunity. And this tells me when Alex Karp says, our demand and interest from companies for our AI product is without precedent, that means it's without precedent, and this is crazy, okay? And so I'm going to go out there on a limb and say, gosh, I think Palantir's probably going to come in with some massive revenue beats throughout this year. And I don't know if it's going to be 10x, like obviously Nvidia is doing here, but it's probably going to be substantially above what analysts have them doing of 12 and 17 and 16 and 19% growth, okay? I mean, put the piece of puzzle together there and you find a few things, okay? Now, next up, if you're talking about your fundamentally changing revenue numbers for companies, you're going to have to fundamentally change earnings per share numbers, okay? If you're talking about now Nvidia is going to be growing 60, maybe 80% this year, right? Versus obviously they weren't even expecting close to that growth. Then ultimately, this company, you got to understand, for every dollar a company like Nvidia is going to bring in for their top line is going to be, dramatically more for the bottom line, right? And so in regards to Nvidia, 459 was expectation for fiscal year 2024. I mean, I think $8 to $10 is very realistic for Nvidia now for fiscal year 2024, which is what they're in right now. $8 to $10 is very realistic in my opinion. If they're doing $8 to $10 this year, then you can easily throw $12 to $15 EPS next year without question, right? Because next year you would expect first quarter, second quarter to be far stronger than this year was, right? Because it's not like the AI demand's just one off, and these are multi-year cycles, and usually there's a ramp build that, you sometimes don't peak for 3, 5, 7 years in terms of that, right? So right now, Nvidia is likely trading at a 35 to 50 real forward PE. Now, for a company that is, let's say, going to grow revenues 60% plus, is that high? The answer to that is, I hope you know it, absolutely not. That's not even remotely high. If you're talking about a company that's going to be growing 60% plus revenues, I mean, a 30 to 50 is laughable. That actually means the stock was significantly, epically undervalued. Undervalued. And that's the craziest part of this is people have gone from going into these earnings thinking this is a massively overvalued stock. And now you're walking away, and if you know anything about valuing companies, you're walking away and you're saying, actually, even after this crazy after-hours move, I think it's undervalued. And you don't get this sort of move in this sort of market cap without a lot of Wall Streeters realizing, crap, man, we messed up here. This is actually really undervalued. And this actually has huge opportunity over the next several years here of expansion. Now, in regards to Palantir, right? Analysts have them doing 5 cents of EPS for the next couple quarters here, 21 cents for the full year, and then 25 cents next year, right? I can tell you, if revenue comes in much better than expectations are, which I think it is, guess what? Earnings per share is going to likely come in much better than expected. I think 30 cents is very, very doable for Palantir this year. And I think 50 cents is very doable for next year, right? So that puts Palantir at a 40 to 50 real PE ratio, right? Now, what I just laid out to you right there, if you're a little more advanced, your mind should be going to something. Your mind should be saying, wait a minute, okay, let's say these companies are roughly in the same forward PE metrics, right? Well, wait a minute. Nvidia is going to likely grow massively more than Palantir. Palantir, let's say Palantir does 20 to 30% revenue growth. Nvidia could be doing 60%, right? Could be a double or triple. So why would I pay roughly the same forward P for Palantir? And that's where your mind should go. And that's a great question. And if your mind went there, you're on a high level. You're on a high level. And if you're not, don't feel bad about yourself, okay? Now, a couple things that are very important here. The first is, this is significantly important. First thing is, these companies are not in the same sector in terms of what their businesses do. The bottom line is, in a company like Nvidia, because they're selling one-off chips, right? They're not going to trade and command the same multiple that a company like Palantir will command, because Palantir is more seen as more of a SaaS play, sticky business model, recurring revenues. Nvidia is not really seen as that. So a company like Palantir should always command a multiple significantly above a company like Nvidia. No different than a Microsoft should command a valuation that's significantly above, I don't know, a Corsair Gaming, for instance, or something like that, right? A software company versus a hardware company. The hardware companies just don't command those sorts of multiples, okay? Now, the second place your mind should go is, how long have these companies been profitable? NVIDIA's been profitable for a long, long time, right? Like a long, long time. It's not like they're new to a net income game. They've been profitable for a long time, and they've just been expanding their profitability. And I think on the lowest end next year, you should be modeling out $10 billion in net income. I think on the high end, you should be modeling out $30 billion in net income if you're really, really bullish on NVIDIA next year. That should be somewhere roughly where you're at. And think about where this company was, $253 million in net income. And now we're talking about, low end $10 billion, high end $30 billion next year, right? From $253 million in 2011, right? Palantir. This is a deal with Palantir. It's a massive net loss company for years, right? 2018, they lost almost 600 mil. 2019, they lost 588 mil. 2020, they had a net loss of $1.1 billion. 2021, $520 million net loss. 2022, $371 million net loss. The company just got 2 quarters of positive net income, and the company's expected to have net income here on out. So this is a company that's at the infant stage of profitability. The infant stage. And so this is like a 9 to 12-month-old baby learning how to walk, okay? Like, they're learning how to walk, they're going to start running, and it's going to be really fast. And when you see companies get to this infant stage of profitability, things get really fun really quickly. And that's exactly what I think is going to play out here in regards to Palantir, right? But here's the thing. A lot of people don't look at... So basically, you should be willing to pay a lot more for Palantir than actually Nvidia, even if the growth rate's lower as far as revenue, because this is a company that's at infant stage of profitability, and their profitability is going to expand at a much quicker rate, in my opinion, than something like an Nvidia. But some people don't even look at net income, net loss that much in regards to Palantir specifically. There's a metric they look at a lot more that they think is more important. Now, personally, I love to look at net income. I love to look at earnings per share. I love that stuff. But the thing that people look at more with Palantir is this next thing, okay? That is free cash flow. Look at free cash flow for this company. It has been skyrocketing. This is back in 2022, $20 million in that quarter for free cash flow, $77 million free cash flow, $109 million free cash flow, and now they've been putting up 183, 182. The company is likely going to be putting up $200 to $300 million per quarter in free cash flow, and it's going to happen sooner rather than later, as in like next quarter, okay, in the next several quarters. So which means if you run that on a yearly basis, well, how much free cash flow are we talking over the next year? You're likely talking about $1 billion plus of free cash flow in 2024, right? And if you're talking about you're paying a $25 billion market cap with $1 billion plus on free cash flow, and this company's still so early days in this AI opportunity and their business model in general, their expansion opportunity, it's not a high valuation whatsoever in regards to Palantir. It's actually a deal, okay? So when you look at this, and then we'll talk about how I'm positioned in different AI stocks and whatnot, the conclusion is Nvidia and Palantir both look very expensive at first glance. And, if you just look at the trailing 12-month P and the forward P that analysts have out there, right? You're going to look at that and you're going to say, oh my gosh, it's too expensive. I can't look at it. It's overvalued, right? Use some buzzwords. And you start digging a little deeper and you find these stocks actually look cheap, even after their moves. That's the incredible part, okay? Now, in regards to AI stocks, right? This is my AI stocks watch list. This does not mean this is the only companies that are going to benefit from AI. There's going to be others. These are some of the ones that I think are best positioned to benefit in a massive way from AI. Adobe, Tesla, Microsoft, Google, Palantir, Meta, Nvidia, Amazon, and AMD. Now, personally, I'm positioned in 4 of these, right? Tesla, Palantir, Meta, and Amazon, right? And in regards to Meta, here's my position so far, right? We're up about $230,000 so far in this position. I think we're going to be up a whole lot more. How does Meta benefit from AI, by the way? Several different ways, but the best one, in my opinion, is going to be in their algorithms and being able to serve you content, videos, pictures, whatever that are ultimately you're most interested in, right? And all that's going to be algorithm based, all that's going to be AI based, okay? Tesla, obviously positioned in this one. So far, we're up about $265,000. I think, Tesla's obviously going through a tough time short term in terms of high ticket purchase items, but Tesla's long-term opportunity is absolutely immense, right? Amazon, so far, we're up about $12,000 in this one. We're going to be up a whole lot more than that in future years, and this is just an easy money play. Amazon can obviously benefit from AI in a lot of ways. AWS is going to benefit in a substantial way over the next 10, 15 years in regards to this, right? Obviously, in terms of serving you up products that you're more interested on the e-com side, that's going to be massive. So there's a lot of different benefits from Amazon that they're going to see from AI over this next 10, 15 years. And so I'm going to continue to buy Amazon stock regardless this year. I'm buying Amazon all the way up to $150 a share, if you didn't already know that, okay? And in regards to Palantir, right? So far, we're up $21,000 in this position. I think that's a small amount compared to what we'll be up in the future. In Palantir, this is a stock that I want to continue to add position to over time as well. This is one of those that I'm looking at, and it's just so early days in the story, in my opinion. So much to climb here. Such a sticky business model, in my opinion. And I think it's just going to build out to a cash flow. It's already built out to a cash flow machine, but I think we're still early days in their cash flow story. That's a crazy thing. Like this is going to be a company doing, in my opinion, $2, $3, $4 billion a year in free cash flow. I mean, when you're throwing out that sort of money, imagine the share buybacks Palantir can do over time if they want. Imagine the dividends Palantir can pay out over time if they want. Imagine the other companies they can buy out over time if they want. Imagine the employee force they can continue to build out if they want. So, those are kind of my positions there. And certainly in regards to Amazon and Palantir, I want to continue to build those ones because those are much smaller positions than obviously Tesla, which is a $300,000 plus position for me in the public account, and Meta, which is a $453,000 position for me in the public account. I appreciate everybody joining me. I hope you got some really good value out of today's video, folks. Let me know if you did. I appreciate you joining me. I put together this about 24 hours ago or so. Investing in 2023 and beyond, if you have an income of $100K or less, that should help you out immensely. It's a free workshop. Pinned comment for access to that. Enjoy that. Get some good value out of it. Thanks so much. 27,000 plus subscribers. Thanks for being subscribed, and have a great day.